Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Riiv to receive the top 10 stocks to buy right now. This has been on a really volatile ride over the last week, and it's in large part because of the USDC token. This is a stable coin that has become really popular in the world of cryptocurrencies and Web3, but it ran into a number of questions late last week when Silicon Valley Bank was taken over by government authorities. And over the weekend, we didn't know exactly what the future of the token was going to be because there was $3.3 billion in assets held at Silicon Valley Bank by the Center Consortium, which runs USDC and is 50% owned by Coinbase. But we have a little bit more clarity now. So I wanted to get into exactly what happened and how we should think about the USDC token and Coinbase's involvement in the future. My name is Travis Hoium. Thank you for watching Riiv Investing. Please subscribe here on YouTube and turn notifications on so you get alerts for all my new content. Now, if you're not aware, the USDC token is just a stable coin that is used on Ethereum and Solana primarily. And it's basically just a way to move money around without taking the risk of cryptocurrencies that can rise or fall dramatically in a short period of time. It is backed by real dollar assets, primarily things like short-term US treasuries, and then bank deposits. That's the other thing. That's really what got the USDC token in trouble over the weekend, was that there was money put not only in Silicon Valley Bank, but other banks as well. And it became a question about whether those deposits were going to be lost. Traders actually traded the token itself down to around 90 cents at its low, which is really unusual because there's an arbitrage that traders can often do by buying a token for something like 90 cents and then selling it back or redeeming it with the Center Consortium for that full dollar. But the question was, were they going to be able to do that? And by the end of the weekend, we got the answer, and the answer was going to be yes, that the US government was going to backstop all deposits across the US, but they did take over Silicon Valley Bank and Signature Bank, which is actually two banks that the Center Consortium and Coinbase use. One of the unique things here is that not all banks will do work with cryptocurrency companies like Coinbase or the Center Consortium or Circle, who is the other partner in the Center Consortium. So there's a limited number of suppliers on the banking side. And one of the challenges was that that could be squeezed even further if Silicon Valley Bank went under and stopped operating the way that it used to. Now, it looks right now as if the bank itself is operating as it would normally would. It's just that the government is backstopping those loans and equity holders have been wiped out. So it's sort of back to business as usual for the USDC token. That's important for Coinbase because, like I said, they share in the economic benefit of the token. There's over $40 billion of assets in the USDC token, and those assets are generating interest. This is one of the reasons that Coinbase's interest income has shot up over the last year because short-term interest rates have gone up. That money is not shared with USDC token holders the way that it is if you have a bank account. It goes to Circle and Coinbase. And this is a really big business for Coinbase. In the last couple of quarters, interest income has been over $100 million. I think in 2023, if we continue to see rates edge up a little bit, that number could be as high as $800 million in interest income for the entire year for Coinbase. That is a lot of money, especially given Coinbase's operating losses and drop in the stocks since coming public. So this is a business that they really need to do well. And there's a lot of questions about that over the weekend. I think for now, there is a lot more stability. And the question going forward, is this going to be a bigger piece of the financial picture, or is it going to be shrinking? And we simply don't have an answer for that yet, but I want to make a case for both things. One is we found out this weekend that there's a lot more risk in some financial institutions than a lot of people thought there were. And custody of those assets when they belong to a bank aren't actually yours. You're loaning that money to a bank. What's unique about the blockchain and self-custody that the blockchain has brought us is that we can actually have custody of those assets ourselves. Now, there's risk in that. I don't want to underplay that, but that's the case for a lot of Web3 use cases, is that you have custody of the assets or those USDC tokens yourself. Now, the question on the back end is, are those assets and the assets that are backing a token like that safe? And I think we have a lot of questions. But there are solid assets like treasuries behind it. So over time, as long as there's not bank risk or intermediary risk, counterparty risk, as you would call it, this should be a relatively safe place to put money, and potentially safer than banks in some cases, depending on where you are in the world and what the regulations are. So that's something to keep an eye on. I think cryptocurrency values have actually shot up in the last few days since the bank depositors were saved. And this is what I think one of the reasons is that self-custody of assets and having digital assets looks a lot more appealing if the risk of your bank failing is bigger than it was just a week ago. I'm not sure if this is a precursor to the blockchain disrupting banking, but that would be a very bullish case for a company like Coinbase. For now, it looks like the biggest risk of USDC going under or collapsing is behind us. That's great news for Coinbase. That's why the stock is up so far this week. Whether or not that will mean more momentum for Coinbase and for assets like USDC, we will have to see in time. What are your thoughts on Coinbase's position and its stake in USDC? Are you bullish on stablecoins? I'd love to hear your comments in the comment section below. Give this video a like and subscribe to Riiv Investing here on YouTube. Thanks for watching. See you again next time.